Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisor and accounting services firm based in Australia and New Zealand. I'm with Ian Reynolds, trader, investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Ian, welcome.
Happy New Year.
All the best, Ian. Hope you had a great break.
I did, thanks.
Excellent. And I know the markets don't particularly shut down, and since our last podcast, I know a number of things have been happening. But we'll try and keep it short and to the point this week.
About 15 minutes, yep.
Wonderful. So today, a number of things just to kick us off. Trump is spooking the markets yet again with tariffs with Greenland. EU emergency meeting today. A potential snap election in Japan. China buys nearly $1 billion in bullion from Russia in November alone. And the Fed minutes confirm lack of cohesion. So a number of things there. Did you want to go through any of those points now? Or
there's been a lot of stuff in the last month. What's moving markets this morning was Trump, Greenland, tariffs on people that are not helping him get Greenland.
Mostly NATO countries,
Yeah, absolutely. US stock market is shut today.
Yep.
Martin Luther King Day.
Yep.
Futures were off 1%. It's moved the dollar down. On Friday, bond yields in the States broke up, which
Right.
I'll show you later.
Yes.
So crypto came down this morning, but more importantly, it sent gold and silver to new highs yet again.
Yes. Yep.
So if you remember the last time we spoke,
Yes.
if you just extrapolate where those gold and silver were,
Yes.
that's exactly what's happened over those 4
They've
weeks.
kept going.
Yes. So we're not going to dwell in the past because markets don't care.
No.
Past is the past.
Yep.
Trends at the moment, gold and silver, I'm saying, still going up. In fact, a lot of commodities, copper, nickel.
Yep.
The yen has weakened off and yields have gone up again.
Yep.
In Japan. The snap election caused things to rally a bit, but that didn't last long.
And is that snap election, is it government driven? Is it the party that's in there right now looking to take advantage of its how it's running at the moment? What's the
so the new PM has been in for 3 months or something like that, the one that upset Trump.
Yes.
And China.
Yes.
And everyone.
Yes.
So she's very popular because firstly she's female, and secondly she's coming with some new ideas because I think Japan's had a new prime minister, one every year for a long time, haven't they?
Yes.
And seems to be more stable, so she's taking advantage of sudden popularity.
Yes.
To call a snap election.
Yep.
But she is someone that likes giving money to the people.
Okay.
Which isn't necessarily what the financial markets want to hear.
Right.
And we'll go through the charts anyway about that.
Yes.
Dollar's down as well. Dollar at point of inflection. Lots of commentary from the Financial Times, for example. Is this the inflection point for yields, or more particularly debt? Because at some point, $40 trillion has got to mean something.
Yep.
Currently, no one cares.
No.
But they will do, and it will be very sudden.
Yes. Okay.
So lots of commentary around that, the end of the fiat currency system, all this sort of stuff.
Right.
And as usual, Trump is just creating trouble all over the world just to deflect from the fact they're $40 trillion in debt.
Right. And the fact of China, we're talking about the $1 billion in bullion from Russia.
Yeah.
What does all of that mean? Why have they done that? Is it an isolated event? Have you got more background to that?
China's been buying bullion, both gold and silver, for, at least 2 years, right? And there's some official numbers and unofficial numbers. Russia has been having to sell gold to pay soldiers.
Yeah.
So if they're going to sell it, why not sell it to China? I'm guessing is the thinking.
Sure.
But the thing is that we're moving away from markets to private arrangement.
Sure. But does that influence the market given or are they, by buying Russia's bullions, is that influencing price anyway?
it's actually pushing price up because they know how serious China is to do such a thing.
Yep.
In silver's case, it's a structural supply shortage, which is pulling gold up. But if we're going to have a new monetary order that the BRICS countries want, it will be, if anything, gold backed.
Yes. Yep. Yep.
So
owning gold is
it's a no-brainer.
Yeah.
In fact, everybody wants it. All the central banks are buying it, pretty much.
Yep.
And Trump even wants it.
Yep.
Because he's got Fort Knox full of Nazi gold or whatever's in there.
Yes.
And, you know, the more the price goes up, the more he can pay off some of the debt.
Yes.
Assuming that's not being outpaced by the rate of the debt being created.
Yes.
So it's kind of something that everybody wants. So there's no structural imbalance there.
Yep.
Unlike silver, which is being suppressed.
Yep. So trends that you're seeing, you've already touched on, gold and silver.
Yep.
Japan's yields going higher. The USD yen moving there, whereas the US yields are up, whereas the US dollar is down.
That's right.
Did we want to go through the charts at this point in time?
Yep. Just to say what's up next.
Yep. Sorry.
Yep. That's right. In the we have Japanese monetary policy meeting this week.
Yep.
And we'll go through that when we look at the charts. Fed's next week with Bank of Canada.
Yep.
And the thing that everyone seemed to want to ignore, which is the US government may shut down on January 31, because the agreement to keep it through, the vote that they finally got through,
Yes,
only went to the 31st of January.
And everyone's forgotten about it.
Correct.
Okay.
Got another 14 days to remember about it.
Interesting.
Yeah. All right, so shall we take a look at the charts?
Yes.
Okay, cool. Logically, the way I've arranged it. So you can see that in the last few days, Bitcoin has taken a bit of a hit, as has Ethereum.
Mm-hmm.
We've been buying Ethereum actually recently because tokenization of real world assets, stock exchange, stocks, real estate, everything is going to go onto the blockchain.
Right.
There's only one blockchain that's going to do it, which is Ethereum.
Yep.
At some point, you've got to buy some.
Yep.
Starting to build a position in that.
Okay.
No, don't particularly like the price, as you can see. Who would? But
yeah,
the blue area is kind of the buy zone, which we've bounced off of.
Yep.
So we'll see where that goes. Gold. So this is getting very complicated, this chart, but let's just take a look at it from the monthly perspective. And so it's just going up.
Yeah, one direction.
And you could say that's an aggressive move, but not really when you consider it against silver, which has just gone nuts.
Yes.
Right?
So are they both outside of your predicted band there, are they?
Yeah, totally.
Yeah, which is a surprise then at the end of the day.
Yeah, I mean, it could go anywhere.
Yep.
I have no idea where it's going to go.
Yep.
All I'm doing is moving my stop loss up.
Yep. Yep.
To protect my position. But,
sure.
You know, these indicators down here, which are, you know, esoteric to some extent, this is meant to show it's severely overbought, but it doesn't really matter because it's just going up. And it's going up because of industrial imbalance in supply, not just at bullion stage, but in raw materials and everything.
That requires the commodities is just driving it as well.
That's right, because the commodities in everything that is being consumed, from weapons to solar panels to computers to phones, everything.
Yep.
Right?
Yep.
So I mean that's its story, and we've been following it here on this podcast for a year, and I haven't done a trade in it for quite some time actually, because there's no point. Something in Japan is that the yen is weakening still, so this is dollar yen going up, so the yen is weakening. But more importantly, this is the 10-year yield, which has gone up for more than a year now, and has gone up a lot this morning.
Right. And any particular reason why this morning compared to? Because
of the US bond market, which yields broke up on Friday. So you can see we've been really in a tight range.
Yep.
And it's broken up on Friday, late Friday. So it's followed that with the weaker yen, with the election announcements, and really, there are no buyers of Japanese debt that aren't in Japan and told to buy it.
Yep.
Basically, this is the 30-year, and it's just going up in a different kind of way.
Sure.
And yields everywhere are kind of moving up. You can see all these green numbers.
Yep.
But with Japan, it's what we had before the last rate rise, in that the currency has to weaken and the yields have to go up until we find equilibrium.
Yes. Yep.
And the market has been totally wrong about this, apart from myself, of course.
Of course.
Because I think the market's doing all the work for them, and they're just going to keep raising rates till some equilibrium is found, where people, domestic Japan investors, will pull their money from overseas and put it in Japan because they've got the yield back.
Right.
So rather than having zero yield like they had 2 years ago, they've now got, 2, let's call it, on the 10-year, which is something, but not enough, because it's more. 3.5 in America, right?
Correct.
But we're getting there, and there's still more to go.
Yep.
So I still think these two things are going to weaken for us. So yields are going to go up, and the currency is going to go down.
Yeah.
So the US dollar taken a bit of a hammering today. So the uptrend, 15-year uptrend, is here. This line here.
Yep.
And you can see we've hit it twice, and we can't actually hit it there. So price can't even find the chart point.
Yes.
So most likely it will go higher, I reckon. A lot of people don't reckon that. They reckon that the dollar is being structurally moved lower by Trump, which is what he wants, right? To keep US exports competitive. But there comes a point where if you've issued euro bonds in dollars, then you've got to either pay that debt back, which never happens, or you've got to find got to borrow some more dollars.
Yep.
In which case, someone's got to buy the dollars.
Yep.
Stock markets have all gone up in the last month. Let's have a look at what we got. Hang Seng. Let's have a look at the Nikkei 225. So it took 40 years to get back to that level.
Right.
No, that level, sorry, down here.
Yes.
And it's just gone up.
Yeah.
Since
it's
got
that. Yeah.
So all the US markets, even though all the commentators are telling us again, this market is going to fall over. This is the Nasdaq, and the high was in October, which wasn't too far ago. Sure. But, we're not too far off the high.
No, and you've gone close to it several times.
That's right. And if you look at the S&P, where are we? There we are. You'll see that we are actually at the high.
Yes.
And if you look at the Dow Jones, which is suddenly, after 30 years, become important again, we are literally at the high.
Yep.
So since this break, every commentator in the market has been telling anyone that'll listen that the market's going lower.
Yeah.
But it hasn't. It's gone up.
Yep. Interesting.
So lots of people are short on the back of that.
Yes.
So when it snaps up, they've got to get out.
Yep.
I'd say I would be neutral on stock markets at the moment, having been long last year.
Right. Okay.
And that's pretty much where we are at the moment. Most important thing are the US 10-year yield. And the reason why this is important is because it is the most important chart in the world. It's had from 1980, let's say roughly, to 2020, it's gone lower.
Yep.
In a straight line.
Sure.
That broke at COVID.
Yes.
And rates are now going up.
Yep.
Since Trump has got in, and particularly which is this red line here.
Yes.
And particularly in the last few months, there's been a lot of fiscal dominance happening, where with various means, the US Treasury is holding rates down.
Right.
not letting the market move it up,
Yes.
literally by buying bonds in the open market every day.
Yeah.
All the Fed operations, liquidity operation. It is an early form of capital controls.
Right. Yes.
In that here, eventually they might, like the Japanese did, do yield curve control that says I will buy every single one of our bonds at a yield of 420 or whatever it is.
Right.
And that's the end of the story.
Yep.
But when you get that, the capital starts leaving the country,
and
then you have to stop the capital leaving the country.
Yes.
And there's been lots of reports, anecdotal reports of banks not allowing more purchases of silver and gold.
Right.
Now, whether that's because it's a popular investment now, so there are more scammers in it,
Yeah.
or whether it's something more systemic, who knows? The banks certainly don't want you to buy any gold because gold's real money and they don't have any. They probably do, but
Yeah.
They want to charge you for transacting in money, not for holding it.
Exactly right. Yeah.
So everything's kind of really building up now, and you can tell from the messaging from Trump, who's now attacking anything that'll move.
Yep.
That debt, that $40 trillion,
Yes.
is going to become really clear and visible on the 31st of January.
Right. So that is not that far away.
No, 2 weeks.
2 weeks away. So interesting. Over the next 2 weeks, what do you see markets doing with that in the back of their mind?
So markets are reacting to tariffs. So the conclusion from when the tariffs came in a year ago that actually, in reality, it hasn't done much to markets, right? It hasn't raised as much money as Trump hoped.
Sure.
It's pissed off a lot of people.
Yep.
And the reaction this morning is typically of a system that says we've had enough. So you're pushing Europe to the very brink. What are they going to do? So Europe has the biggest economy in the world if you add all the countries up individually.
Sure.
They're not one state, unfortunately.
No. Yep.
But if you were to do that and you would add all of the capital that goes through the City of London, which is its own state and not a country, and it's not in Great Britain, England, or the EU,
yes,
you have much more GDP than you have in America.
Right.
And China.
Right. Okay.
So the question is, can Europe get its act together?
Yes.
Is it even able to?
Right.
Because obviously it's just a political framework at the moment.
Yep.
So I think that you're going to see lots of change in Europe very soon.
Yes. Okay.
And it's up to them whether they can get their act together, really.
Yep.
Because even Trump, I think, wants that to happen because he wants a solid ally, but he can't have a weak ally.
No. Agreed. Excellent. So trend-wise, we've come back from the break, and great analysis and insights here yet again, and the charts show us a lot of different changes. Was there anything else that we need to wrap up on before we finish today? Yeah,
just to finish on trend. So the trend in silver will break, and it will be really nasty. Some stage. Who knows what it is? That candle can keep going up as long as there is lack of supply in the system, right?
Yes.
Gold. This is the big decade-long winner.
Yep.
We're like 2.5 years in from. This is the monthly chart.
Yep.
And when gold goes, it just goes and goes and goes. The other big trends are in dollar yen.
Yep.
Oops. I mean to do that. And obviously, as a reflection of Japanese interest rates.
Yep.
That's the 10-year. And dollar yen is currently nervous that the Bank of Japan is going to come in and buy yen to support it.
Yes.
I don't think they will, and they haven't so far, but it's at a level here where they did.
Yep.
So obviously, it might be unwise to buy it exactly here.
Right.
So those are the big trends happening now, but we could have ones in US bonds if, this break continues. But but there will be lots of shenanigans with the authorities in America to try and stop that happening. Lots of threats.
Yep.
Countries don't get rid of your treasury holdings. There's even been, I'm going to keep this short, talk that if a country, I think it was the Netherlands they were talking about, wanted to sell their hundreds of billions of dollars worth of US treasuries, the Fed would refuse to execute it.
Right.
So you might as well just confiscate it like Russia.
Yes. Yeah.
And a lot of the problem we have now is caused by that confiscation of Russia, because suddenly de-dollarization is necessary for lots of countries.
Right.
It's not an if or a when.
Yep.
It's a necessity to start doing it.
Right. Okay. Well, very interesting. Thanks again for this week's update and charts, and look forward to next week's and getting closer to that 31st of January date to see.
We must do a special party edition on the 31st. Yeah.
We should.
Indeed. Right. Thanks, Tom.
Thanks, Ian.
Cheers. All right. Thank you, sir.